MCX extends its software services contract with 63 Moons for another 6 months, pushing cost-cutting plans as implementation of a new platform gets delayed. Brokerage house Morgan Stanley also issues an underweight call, citing weaker volumes in commodity futures.
Bajaj Auto reports a very weak set of numbers for December, 22% lower versus last year. Export slump as well. The management tells CNBC-TV18 that December sales are inversely proportional to the festive season. Also expects exports to pick up from year on.
Jefferies issues a bullish call on metals, upgrades Tata Steel with a target of 150 rupees a share, also upgrades Hindalco's target price to 600 rupees a share. The entire pack jumps.
Sources say NMDC increases lump and fine prices by 500 rupees a ton as global as well as domestic iron ore prices rise. Pellet prices have also moved higher.
Lenders to Religare approve a one-time settlement of outstanding dues from Religare Finvest. As a part of the plan, Religare and Religare Finvest will pay 2,320 crore rupees to lenders compared to the pre-settlement value of over 5,300 crore rupees.
Hello and welcome to Chartbusters, the first episode of this year itself. I'm Nigel D'Souza and joining me is Mangalam Malu. Well, Mangalam, a good start to trade. We've seen a good recovery from the lows as well. The SGX Nifty said 30 points downtick. I think the bull said, no, we're not going to have any of that. As we speak, we're up more than 50 points.
We are, Nigel, and it's going to be interesting to see whether we go ahead and sustain above that 18,250 odd levels, because that was the high that we saw on Friday. In the last hour, there was a sharp slump. And at the same time, it also coincides with the 50-day moving average. Though there are some visuals coming in out there from the Supreme Court. We will try and get some more details. The Supreme Court bench, of course, will deliver its judgment on the demonetization case. We'll get you more details as and when the judgment is being pronounced. We'll have Ashmit detail the details of that pronouncement as well. But for now, looking good for the market. The question whether it sustains or not.
Well, that's right. And I think that 18,260, that's a bit of a resistance zone. So let's see whether or not we can get to that level. But let's get in Shivangi Sarda for a technical check. Morning, Shivangi. Thanks so much for joining in and wishing you a very, very happy new year. And may 2023 be a cracker for you personally as well as professionally. But tell us about the markets. What's the outlook from year on? And if you could fill us in with a couple of your picks as well.
Absolutely. Good morning, Nigel and Mangalam. Thank you for having me on the show. A very happy new year to all of you, and wishing a lot of success, health and wealth in this new year. So talking about the markets, if we come to the Nifty, we've seen that, very positive rollovers from the December series, despite, narrow volumes. The put call ratio has cooled off from the overheated zones. The FI's long short ratio is also stable now near 50%. So, overall, as we head into the new series, we are quite positive. Any dips could be utilized as a buying opportunity. Now, if we talk about the levels, 18,081 is a crucial support, which the index has respected from the last, 2-3 sessions as well. So that is one level which we could watch out for as a support zone. And the upside, immediately we're seeing 18,350 and 18,500 zones. Now, looking at Bank Nifty, this has been a comparative outperformer in the entire year as we've, concluded it, and there is broader buying in this space, be it PSUs or private space. Now, if we talk about the rollovers as well, it was around 86%, which was higher than its 3-month average rollover as well. So overall, banking index is also quite positive. Any dips could be utilized as a buying opportunity. 43,000 will act as a crucial support, and on the upside, we are expecting 43,750 levels immediately.
All right, Shivangi, thanks a lot for that. Wish you a happy new year. What are the individual stocks that you will be, trading on the first trading session of this new year?
Yes, so my first pick would be from the banking space. As I'm said that, the banking, PSU, as well as private is looking very positive, promising. So my pick would be on Canara Bank. We've seen that from the last 7 months, this stock has been making higher highs. And on weekly frame, we've seen a bullish engulfing pattern formation, and follow-up buying can be seen thereafter. So the stock is quite positive. It surpassed its immediate hurdle of 333 zones and is holding well above that levels. So a buy on this with a target of around 350 and a support of 330 levels. And the second pick would be from the metal space. We've seen quite positive action over here and quite momentum building in these stocks as well. Some of the stocks have witnessed short covering move in this, which will drive the stock higher with greater intensity. So here my pick would be Hindalco. We've seen support-based buying and it gave a breakout above 483 and momentum is sustaining it to head as we head into the Jan series. So here a buy with a target of around 505 and a stop loss of around 475 zones.
All right, take that point. Thanks a lot, Shivangi, for joining in. Meanwhile, at the bottom of your screen, we have numbers coming in from M&M Tractors. Total tractor sales up almost 30-odd%, 21,640 units. Total sales also 23,243 units. This compares with a Nomura estimate that we had was 21,300. So it is beating street expectations comprehensively, as a result of which we're seeing the stock move higher. In fact, of 2022, M&M was the auto stock up over 50-odd% and starts 2023 on a good note with good sales coming in for December, beating estimates, the stock at the high point of trade. With that, we step into a short break. Actually, before that, let's also talk about a segment where we get you a few ideas of profit coming in from our colleagues at Money Control Pro. Madhuchanda Day joins in.
Easy Trip Planners, the online travel agent, managed to sell through well during COVID, and the performance has seen steady improvement. In the last reported quarter, strong traction was seen in gross booking revenue, reflecting the industry trend. Despite competition, take rate from airlines was stable, as well as its market share. However, one-off promotional expenses for improving brand visibility dented operating margin. Despite the increase in competitive intensity, the sector appears to be in a sweet spot. The foray into international geographies, where the company wishes to replicate its low-cost operating model and non-airline businesses, are the next areas to focus on. In view of the sharp correction in the stock prices of travel companies globally, we feel the company's premium valuation might get challenged. However, any weakness could provide a great opportunity to add the stock for the long term.
All right, thanks a lot for that, Madhu. By the way, just keep an eye out on Shipping Corporation of India, that's SCI. Sources to CNBC-TV18 indicate that MC has granted permission to demerge the company, and they've also given permission granted for the core and the non-core assets. In all probability, what we understand is the move will pave way for them to go ahead and divest 63% stake in the company. So I think SCI should be a stock on our radar as well, Mangla.
It should be a stock, Nigel, but this is not something which is entirely unknown because, it was earlier that some authorities announced that they would go ahead and pave the way for the demerger of the company of those non-core assets. So this is just one of the approvals that have come in the series of approvals that are required for this. A step in the right direction. Once this happens, we will perhaps see the demerger, rather the privatization for SCI take place. So a mild positive step in the right direction is what it is. Okay, all right. Well, that's the news that's coming in on SCI. Let's keep an eye out on that one. For the time being, we'll slip into a short break. On the other side, the management of Godavari Power and Ispat, they'll be joining in to brief us about their capex plan, also give us a sense about pricing in the pellet market. Doing well, and in that we have Godavari Power and Ispat. The board has approved a 1,000 crore rupee capacity expansion plan, while setting up of the new 1 million ton per annum pig iron blast furnace is also on the cards. What does this do for the company in terms of benefits? How do they fund this capex? And to talk about the space in general, we do have with us Abhishek Agarwal, who's the executive director of the company, joining in. Abhishek, thank you so much for joining in. We'll talk about the capex in just a bit. But today, all the metal stocks are up and about. We understand that there could be some increase in the price of pellets, etc. as well. So just to get that out of the way, can you tell us what is the current price of pellets? How does that compare with the previous quarter? And, you did say that there could be some reflections upwards starting from January. We are in January. Can you give us a sense?
Hi, good morning. Wish you a very happy new year, Nigel and Manglam, both of you. To be on the pellet side, yes, pellet prices are up by almost 20% post duty removal, which happened in November. Since then, the prices have moved up by 20%. Currently, Raipur prices stand at about 90 to 9300 X plant levels, which was about 75, 7600 X levels before the duty was removed.
Okay, all right. Hi, Abhishek. Morning, and good to see that there has been a recovery. Wishing you a good 2023. If you could give us a sense by when you'll start enjoying these higher prices. Normally, it comes through with a lag, right? So we have the average for the past quarter. If you could tell us what is the average likely to look at, and as for your presentation, the average realization in quarter 2 was 88,200 rupees. For quarter 3 and quarter 4, given the lag and given the price increase, what could be the rough realization?
See, quarter 3 is over, and the average price would be somewhere around Q2 levels, would be about 8,000 levels.
Okay.
And Q4 going forward, since we usually maintain order book about 45 days, so the new pricing will start coming into the picture, in next couple of weeks.
Okay,
so Q4 we expect an average of 9,000 plus.
Okay, so for quarter 3, it will be similar to what we saw in quarter 2, but in quarter 4, you're like to see 9,000 rupees plus. Got that. Right. Let's get back to the capex story then. You'll have announced this pellet capex. The street was waiting for the steel capex, but it appears now you're still going in for pellet and iron ore as well. For the time being, should we assume that the steel plant capex is on the back burner and you want to focus more on increasing the pellet capacity?
No, to be honest, Nigel, see, both are two different things. Firstly, we thought, it's time where we, realize the value, we have from iron ore mines. So that is the reason, we are increasing mining capacity, making it to 4.5 million plus 1.5 million BMQ. And then pellet capacity doubling. The two reasons is that one is we would be needing 1.5 million pellets for our blast furnace, which will be 1 million capacity. Plus additional 1 million, we want to, further add to our merchant sale capacity so that we can, realize the true potential of a mining. So even the blast furnace project is not on the sideline. It is parallel. It will be parallel. Things are taking little time, on the approval side when it comes to land and other issues. As you know, it takes about 12 months. So both the projects will be parallel, the pellet plant along with the mining as well as the blast furnace.
You're telling us that it's not on the back burner. It's a step in the direction of moving towards the 1 million ton steel plant that you want to put up. Is that correct?
Yeah.
You're bracing yourself, keeping things ready.
Right.
You've announced 1,000 crore capex. How confident are you all of it will be internal accruals, or do you think you'll have to borrow some part of that 1,000 crores?
See, at the moment with the current cash flows and with the current pellet prices, we are very confident that the 1,000 crore capex for the mining and the pellet plant will be totally internal accrual. We have no intention of going to the banks and borrowing some money at the moment.
And what is the timeline for this capex? I mean, when does all of this come on stream? And importantly, you said because this is a step in the direction for your steel plant as well. By when do you put the steel plant on stream?
See, I think put together everything about 12 months process for approvals, and then about 24 months for commissioning of the project. So from here on, I think 2026 we should be able to start the operations.
That's for these two plants, and the steel plant is when?
Yes, for the steel plant as well.
Okay, and so all of that.
All the approvals are in place.
Okay, so all of this starts in 2026.
Yes, if everything is in place, especially the approvals.
And what kind of asset turns do you expect on this 1,000 crore capex that you're doing?
Sorry, come again?
What kind of revenue, incremental revenue do you expect on an annual basis of this 1,000 crore capex that you're doing, plus the steel plant comes in 2026?
See, it's difficult to, probably give you a number because, the market is so volatile, 20% here and there. Mm-hmm. But I would say a pellet capacity will double, which is currently at 2.7, will go up to 5.4. So you can assume the revenue from the pellet side will double, of course.
Right. Abhishek, just to clear the air, 1,000 crores is for the pellet and the beneficiation plant as well as iron ore. But to set up the 1 million ton steel plant, you'll require some additional capex, right? How much would that be?
Yes. See, so for the first year, which is the blast furnace pig iron, we estimate about, I think about 2,000 crores. 2,000. And further to, use the liquid metal, hot metal to convert it to steel, we're still evaluating on which stream should we select. So that would take some time for us to, conclude.
So this is 1,000 crores for the pellet plant. You're getting ready for the pig iron plant, which you'll have to spend another 2,000 crores on, plus some additional capex, which we're still not too sure about, but it'll be above 2,000 crores. We're getting that.
Right.
Okay. All right.
Right.
All right. Just a follow-up on that one. By when do you start to spend that 2,000, or when you decide on that 2,000? And when you do that, what would your mode of funding that be?
See, the investment will start only once we get the required approvals. There might be initial involvement of capex when it comes to purchase of land and other statutory approvals. Once that is in place, so I'm assuming by end of this financial, as in the next financial year, by say Q3 of coming financial year, we should be able to start the groundwork on both the steel side as well as on the pellet side, if everything is in place.
And it will only be then that you will decide the mode of funding for the 2,000
We are
crore.
confident. We are very confident. If the pellet prices sustain at these levels, which is about 9,000, 9,500 rupees, then we don't need to go to banks to borrow any money.
For even the 2,000 crore one.
Exactly. So put together total 3,000 crores, we should be, self-sufficient to, fund the entire from the internal accrual.
That's presuming that, pellet prices hover in this vicinity of around 9,500 rupees per ton, right?
Of course, because that is the biggest chunk of revenue we get from.
So we'll have to wait by for these future plans. But in the current scheme of things, pellet pricing is important and the mix is important as well. I recall that, exports used to be 70% plus of your total, mix. Then you told us that, depending on pricing, depending on demand, you'll see how that changes around. Could you tell us, as of now, what is the export domestic mix in terms of sales that you're looking at for pellets? And also margins of around 20% is what you were telling us. But since pricing has moved up, do you believe that margins can be better than 20%?
So on the mix side, we still are supplying 100% to domestic. We still haven't started exporting pellets. We are talking with a few buyers for the first shipment, which will happen probably say in February or early March. But as I said previously, for us, the ex-plant realization is the main focus because we are not supplying to big buyers in India like Tata, JSP, Uttam Galva. So we're not worried about the export market at the moment. Wherever we get the better realization, we will focus on that.
Margins?
All right. And margins, all right, okay. We'll just come to you in a moment because right now it's a historic moment. The Supreme Court is delivering its judgment in the demonetization case. Let's cut across.
Thereof, to accept the demonetized notes beyond the period specified in notification issued under subsection 1 of section 4. Insofar as the first issue is concerned, we have considered the judgments of constitution benches in the cases of the Chief Inspector of Mines versus Lala Karamchand Thapar and Banwarilal Agrawal versus State of Bihar. And the third one, Tej Kiran Jain and others versus Sanjeeva Reddy and various other judgments of the various bench strengths, wherein word any has been interpreted. And it has been held that the word any has to be construed in context to the statutory provisions. And then the second principle which we have considered is the purposive construction. We have referred to the Constitution Bench judgments in the case of M. Petia and others. Then Chief Justice of Andhra Pradesh versus V.A. Dixitulu and others. And Tinsukia Electric Supply Company Limited versus State of Assam, apart from the other judgments. We have held that the modern trend is of pragmatic and not pedantic interpretation. The interpretation leading to absurdity and which renders a provision to be futility has to be avoided. Any interpretation which advances the purpose and object of the legislation has to be preferred when two constructions are possible of particular provision. And applying these principles, we have held that a restrictive meaning cannot be given to word any. And insofar as issue number 2 is concerned, we again refer to the Constitution Bench judgments in Hamdard Dawakhana, Tarakchand, Ratanchand, Bantia, and Birla Cotton and Spinning and Weaving Mills. We have held that for finding out the policy and guidance, a resource can be held to various provisions of the Act, including the preamble, the purpose of the Act, and what is necessary is that the parent statute must consist of an essential legislative function, that is determination of legislative policy, and it is permissible in view of the multifarious activities that it is necessary for the legislature to delegate the working of details. When we have considered the status of the RBI, we have referred to the judgment of the Constitution Bench in Joseph Kurila, then the judgment authored by my learned brother Justice Ram Subramanian in Internet College. And we have specifically emphasized on the primary role of the RBI in issuance and regulations of banknotes, then its important role in monetary and economic policy of the country. Then we also considered the nature of body to whom the delegation is made. In the present case, the delegation is made to the central government, which is answerable to Parliament, and Parliaments are in fact answerable to the citizens of the country. In this respect, we are referred to the judgment of the Constitution Bench in Birla Quarter. Then, in the case of Bharat Chand itself, when clause B of subsection 2 of section 5 was held unconstitutional, in the very same judgment, the Constitution Bench has held clause A of subsection 2 of section 5 to be constitutional on the ground that it provided that the administrator can take action after consultation with the RBI, and therefore there was self-imposed provision which required the RBI to be taken into consideration. Applying the same principle, we have held that in the present case also, the central government is required to take the action after recommendation of the central board, and therefore there is an inbuilt safeguard. Insofar as third issue is concerned, we have basically relied on the judgment in the case of Tata Cellular, wherein the scope of judicial interference in matters pertaining to is very limited. Then we have further referred to various Constitution Bench judgments which are specifically dealing with interference insofar as economic policy is concerned. The judgment in Prague Ice and Oil Mills versus Union of India rendered by 7 judges. Then R.K. Garg versus Union of India. Then Sri Sitaram Sugar Company versus Union. And which has been held that there has to be a great deal of restraint insofar as interference in the matters pertaining to economic policy is concerned. The court cannot substitute its judgment for that of the legislature or the executive. It does not supplant the feel of the experts with its own views. Then we have also scrutinized the record, and after examining the record, we have found that the judicial decision-making process cannot be flawed merely because the procedure has emanated from the central government. We have construed that the term recommendation has to be construed in the context of the statutory scheme, and what is contemplated is a consultative process. And from the record, it appears that there was a consultation between the RBI and the central government.
All right, we'll wait by as the Supreme Court delivers that judgment in the demonetization case. For the time being, let's focus on a couple of stocks. Well, SCI is reacting to a piece of news that we put down up for you all on the screen just a short while back, and the stock is recovered from the day's low. Sources are telling us that the Ministry of Corporate Affairs has granted permission to the demerger of SCI. Tim C joins us to fill us in with more on that. Morning, Tim C.
Morning. Well, as you rightly said, what sources are indicating to us is the fact that Ministry of Corporate Affairs has actually granted permission for the demerger of core and non-core assets for Shipping Corporation of India. Remember, Shipping Corporation of India needed this clearance from MCA because government was wanting to divest 63% stake, and this was a crucial bone of contention because of which the process was getting delayed. Now what we are learning that the formal meeting has happened, and soon the minutes of the meeting will be issued, post which there will be a formal order sent to Shipping Corporation of India and DIPAM to start the process of divestment. Let's see how soon the formal order comes. We are learning that it will be sent in another 5 to 10 days.
All right, Tim C, thanks a lot for that. In fact, the Shipping Corporation of India had informed the exchanges of this meeting of the final hearing on demerger of core and non-core assets on December 29th. So this is an outcome of that itself, which Tim C has gathered from her sources. The formal order, however, comes in the next 5 to 10 days. The important part, however, is that the value of the non-core assets isn't as important from a larger scheme of things for SCI as the privatization itself is. What are the kind of bids that they will receive? When does the privatization happen? Those will be bigger triggers than just this. This is just a smaller speed breaker, which has now been done with the final order coming in. We take your leave on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.